Okay. Uh, Good afternoon, everyone. My name is Akash. I'm the Chief Growth Officer at BizData. Generally, you don't see me on these AMA sessions and on the demo pitches. Today, I'll be your host for this fantastic AMA session with the founder of MOOEV, uh, who are into heavy duty trucking. So we'll take this session forward. Today, the session will be structured in this way. Since it's a deep dive and AMA session, okay, we would be going ahead with a small introduction and a small brief for everyone to refresh your understanding on MOVE. After that, we will proceed with the deep dive and Q&A session. What you can do is all of you can either go ahead and enter your questions into the chat box, and I'll take it up with Raghvendra, the founder of Move. Or what you can do is alternatively you can raise your hands. I'll unmute you, and then we can go ahead and have a chit chat live. Okay. So, before we start the session, I want to thank each and every one of you for joining on a Sunday afternoon. I know Sundays are generally lazy, but yeah, thank you so much for joining in, and we can take this forward. So, with us, we have Raghvendra. Raghvendra is an IITN, and he has a very vast experience into the domain and into the transportation as well as consulting and comes from a very blended background. He's the founder of Move, and today will be taking the questions up with Raghvendra. So over to you, Raghvendra.
Sure. Thank you, Akash. Good afternoon, ladies and gentlemen. Thank you for joining on a Sunday. Just a quick intro about what we are doing. I presume some of you may have attended our previous session. So, assuming some of you might be joining in for the first time, let me give you a quick introduction on what we are doing, and this will be only for short 5 minutes, 10 minutes, not more than that. And after that, happy to answer any specific questions that you may have regarding our approach, the business model, the traction, on or any of the questions otherwise that you may have, right? So personally, just a quick intro about myself. As Akash mentioned, I did my chemical engineering, from IIT Madras. I did my masters from there, and for the last 15 years, I've been in renewable energy, clean tech, clean transportation kind of segments. So come with vast experience from that specific areas. Uh, uh, Particularly over the last 6 years, I've been focusing exclusively on clean transportation, which is very relevant for the work that we're doing. And as you may have seen on the slide deck, if you've had a chance to go through, we are working on deploying electric heavy-duty trucks and charging infrastructure for primarily for industrial customers as well as for maritime ports ecosystem. You may have come across many EVs across different form factors, right from two-wheelers to cars to LCVs to buses. But heavy-duty vehicles, particularly trucking, is a very nascent. There are not more than 100, 120 trucks that are running in India as of today, and these are all primarily owned and operated by the cement companies themselves in majority of the cases, right? I'll just use a couple of slides as a reference just to give you an understanding on the vehicles that are available today in the market, so that you also have a fair share of understanding in terms of where we are as a country. So yeah, so the market is huge, but before we go there, the market is huge. As some of you may have background in the heavy duty trucking, but we are specifically starting with the regional haul segments like cement clusters, sand and steel clusters, or maritime ports, where majority of the logistics happens in and around that cluster itself, right? Let's say within a 100, 150 kilometer kind of a radius. And with the batteries that are there on the vehicles, these are the most attractive segment to look at than, let's say, a long haul, like a highway segment, per se, because in a highway, we need multiple charging stations, and we may need additional time for the charging as well. But when we look at regional haul, this kind of complements in terms of the charging time as well, right? And in terms of availability of vehicles, some of you may be aware of companies like Electra, IPLT, which is now fully under Murugappa Group, under Tube Investments. You have mining tippers, and you also have 55-ton tractor trailers, and these are all 6x4. And recently, Ashok Leyland has also come out with 14-tonner and a 55-tonner vehicle, and they also have a 18-tonner vehicle on which will be available in next couple of months, right? Uh, what we are trying to do is imagine it's like a Blue Smart or a quick ride kind of fleet operators that you see on a public road today in cities, except that we are in a B2B segment, and we are also looking at the trucking, right? In for all these customers that we are focusing on, cement, iron, and steel, typically the logistics is supported by the third-party transporter, and they typically would prefer to have, even on the EV side, prefer to have a EV transporter. But the challenge is the charging infrastructure doesn't exist today. So if we want to solve the problem for the corporate, we have to look at both charging and the fleet. So that's where we come in, and we on a case by case basis, project by project basis, we bring the vehicle, we build the charging infrastructure, we connect with the grid, get the power availability, everything, and we also get the vehicle finance from the NBFC, and so that ultimately it is easy for the customer, our cement company, or iron and steel kind of company, to just sign a contract, and just the way they do with the diesel transporter, and then pay on a per ton or a per ton per kilometer basis, right? On the other side, we are definitely an asset-like model. We don't own the asset. The assets are held by NBFC itself. And when we sign the contract with with our customers, we sign for a very long term. Let's say typically, anywhere starting from 5 years to 8 years kind of a tenure, which should suffice for the first life of the battery, right? For these kind of tenures, the NBFC holds the asset and leases the vehicle to us. So we essentially pay lease rental every month. And on top of that, we manage as the charging infrastructure, charging, electricity, drivers, everything end to end. What the customer gives us is X number of trips that they want us to do in that specific, let's say region or near the plant, that's how we go about it. And tomorrow, if any local fleet operator, let's say the traditional fleet operator, wants to bring in their own truck, they can definitely leverage our charging infrastructure that we would have already built there, right? So that way, it is complementary to what the current ecosystem is working on. Our objective is to showcase that EV trucking is definitely possible and suitable, and as well as cost effective, right? And operating this entire fleet obviously is a very, very data intensive as well. Compared to the other smaller form factor like a two-wheeler or a passenger car, we'll also have to factor in range, as well as, let's say, since we'll be using high charging, high voltage charging infrastructure, we also have to factor challenges that come with high tension lines as well, right? So availability, the cost of power, the source of power, all these are very unique to the heavy duty vehicle segment. Where we are today, we have a couple of contracts signed, to deploy first 15 vehicles, and we do have a very, very large pipeline, right? Just to give you a sense, each truck that we deploy is like equivalent to 15 cars, right? And today we have a contract to deploy 15 vehicles itself. So this is equivalent to deploying anywhere from 200 to 250 kind of cars, and that's the kind of revenue we start from these segments as well. Yeah, we have a lead investor, and we are working with BizData and work with the partners like yourself to see to give you an opportunity to come on board and join on this journey, and then realize substantial benefits that we see. Given we are one of the earliest companies to look at an OPEX based model, there is a substantial upside as well, and we do have a very strong pipeline from all these marquee customers, both from cement, iron and steel, as well as ports, right? And yeah, happy to answer any questions. But in terms of revenue projections, everything, BizData team might have already shared. Given each truck is expected to generate 6 to 7 lakh a month kind of a revenue. Even if we deploy 200 vehicles, that's like 12 to 13 crore revenue per month, right? So it scales very fast given the nature of the industry. And yeah, we are only raising a very small round as of now, just to get few initial vehicles on ground, and then build our own, let's say, initial experience as well. Given the entire ecosystem is new, everyone, right from OEM to customer to fleet operators like us, are going through initial learning phase, because the entire industry itself is nascent. So our objective is to get these 15 trucks on ground running, and then based on the experience that we have, look at the subsequent 300 odd vehicles over the next 18-month kind of time frame. So that's where we are, and happy to answer any questions you may have.
Thank you so much, Raghvendra ji, for that quick brief. And you know, I'm sure there are already a lot of questions into the chat box. Okay, so let's go ahead and take this forward. We have the first question from Mr. Prashant Kanu. Okay, he's asking for 24-25. Your revenue projection is 180 crores. What will be your project profits? I think it's a two-part question.
Understand. So let me go to that. This is not 180 crore, this is 18 crore. So all these numbers are in lakhs. So this is 18 crore. See, in the cement industry, typically a truck does 6,000, 7,000 kilometers a month. Depending on the lead distance, that could be anywhere from 40 trips to as much as 60 to 70 trips a month, right? And typically, since we don't lose any time additionally in these segments on the charging, we can do as many number of trips as a typical diesel truck does, right? And with that kind of asset utilization, we'll definitely have 6 to 7 lakhs revenue per truck. And with 15 trucks, it could be anywhere from 70 to 80 lakhs a month, right? So that's how I mean, that's for 15 vehicles, but yeah, for 25 vehicles, yeah, it will be around 18 CR per annum.
I hope that answers your question, Mr. Kanu. Guys, just want to reiterate.
And just on the profit margin, there are two ways we look at it. Our cash outflows will remain same because irrespective of number of trips that we do, we will incur the same monthly release rental. On the other hand, the cost for charging, the driver cost are all dependent on number of trips, right? But at the same time, these two factors are very, very less in the total cost of operation. They don't contribute more than 25% of the overall the cost of operation, right? So more we run the vehicles, better our profit margin does. And at the same time, when we sign the contract with our customer, the customer also gives us guarantee that they will give a minimum X number of trips, which is sufficient for us to at least break even, right? If we do as many trips as a diesel truck does, we will have a healthy 15 to 20% kind of a margin on a month-on-month basis. And this is net margin, right? And these are obviously necessary to get the vehicle financing from these NBFCs as well. So 15 to 20 is a fair assumption, a realistic assumption. Not optimistic, but realistic assumption.
Okay, perfect. I hope that answers your question, Mr. Kanu. If in case any further questions, please. I want to reiterate this to everyone. You can either raise your hand and I'll unmute you and you can ask your question, or you can go ahead and pin your questions into the chat box. So we'll move to the next question. It's from Mr. Sen Gupta. He's asking, do you intend to use your expertise on battery management as a service to augment revenue?
See, right now, since all these vehicles have, anywhere from 250 to 300 kind of kWh battery size, The battery management system, is on the vehicle that is provided by the OEM itself. And typically, those battery management system again comes from the battery supplier. Typically, your CATLs, various of the world, right? Given we are fleet operator, we will definitely be, monitoring the batteries performance, everything, but will not be managing the battery, in the typical BMS sense, right? Because we have to factor in all the warranties that come on these vehicles as well when we deploy the fleet. But what we do manage is the fleet operations, the charge infrastructure operations, as well as all the associated, let's say, energy infrastructure operations, right? So that's where our core objective and value addition comes in. And yes, how we charge, how much we charge, all impacts the battery asset life. And what we initially rely on, because some of these vehicle OEMs do guarantee 9 lakh kilometers on the warranty, with the warranty itself, at least 10 years or 9 lakh kilometers. So we ensure that, with the sufficient charging, these assets should, properly get charged, not, let's say, rapidly charge as well. 180 to 40 kind of kW is what we look at, not, let's say, upwards of 320 kind of kW, because that will impact the battery life. So yeah, that's how we go about this.
Perfect. I think that answers your question, Mr. Sengupta. Uh, Next question is from Mr. Bhattacharya. He's asking, can you share your unit economics, please? As I joined late, I may have missed it.
Okay, I don't have a specific slide which talks about the unit economics, but let me use a simple example where we are in one of a project we are deploying 5 vehicles with 2 charging stations, right? And typically trucks do around 40 to 45 trips in a month in these kind of let's say regions where we transporting fly ash from a thermal power station to cement plant, and the thermal power station has a lead distance of 120 kilometers. Right. So typically, if you do that, your let's say the asset rental would be around 2 lakhs per month, and your charging station would be additional of, let's say, 50,000 rupees. And on the other hand, your energy cost might be anywhere from 1 lakh to 1.5 lakh. Drivers in the similar range. So factoring all that, if we do as many trips, 45, we would have a healthy, at least 75,000 to 1 lakh, revenue margin per truck. The profit margin, so not revenue. If that answers the question.
Perfect. Mr. Bhattacharya, our team would be sharing all the details to you over.
Yeah, and BizData has the entire sheet, and they'd be happy to.
Yeah, we can share that. One of our investor relations team will share the entire unit economics and in detail, data with you. You can have a review over there. Perfect. So we have one next question again from Mr. Prashant Kanu. He's asking, how much is the guarantee do you hold as committed revenue for current year in terms of trip?
Okay. See, typically what happens in the cement industry, let me give an example of, where we are, right? In this specific project that where we are trying to deploy, customer needs anywhere from 1,000 to 1,500 tons of raw material per day, right? And with 5 vehicles, we'll only be supplying about 200 tons, right? And there is an incentive for the customer to use our vehicles as much as possible. So that would also ensure that they give the fleet management as much as possible, because there is an incentive for the customer also to use our trucks, right? And given that scenario, what customer, because the cement manufacturing is also highly intensive process, and there definitely will be, let's say, 3 to 5 days in a month where the cement manufacturing undergoes certain maintenance, where they may not need as many number of trips on those specific days. So that's where cluster becomes very, very important for us, where depending on how we structure our arrangement, we'll also have the flexibility to to serve the adjacent customer located in that same cluster. Even otherwise, if the customer does not need raw material, there is always that outbound logistics that does continuously happen. So that what the customer guarantees is they will guarantee, let's say, for 20 days of a trip, but it's not necessary that it will only happen for 20 days. On any given month, it may happen 25 days, it may happen 28 days. But we ensure that asset runs at least 30 days because 25 days with one customer, maybe 5 days. If my primary anchor customer doesn't need, on those 5 days, we'll do with the other customers in that cluster. So that's how the cluster operates, whether it's diesel truck or going for EV trucks.
Okay, perfect. So we have, Robin G, who's raising his hand to ask questions. Okay.
Okay.
So, Robin G, you can now unmute yourself and ask your question.
Hi, Raghvendra.
Hello, Robin.
Banks are not offering loans to electric vehicles, in my understanding. So,
Yeah.
how this case, any truck owners will not spend full amount from this own pocket. They are obviously go for the loans.
Yes.
In this case, how it's possible to get the loans, run the business for the truck owners?
See, we are not. Let me go to the business model, right? So on the financing side, we don't. We are the fleet operators. We are the truck operators, right? There is no other truck owner per se, right?
Okay.
The asset will be held by the NBFC. We are working with a couple of NBFCs. Banks, as you rightly said, are not at the stage today to finance these vehicles because the entire industry is very, very nascent, right? So that's why we are working with some well-established NBFCs, some of the largest NBFCs. At the same time, some new age EV financing NBFCs as well. The companies who have been typically financing, let's say, LCVs over the last couple of years, they are looking at heavy duty vehicle segment as well because for them, the challenge, for the smaller NBFCs specifically, since they come from the B2C segment, they also want to have their own learning on the B2B segment because there is certain comfort on the B2B, right? So today, the waves we have structured it is these smaller NBFCs buy the asset and lease the vehicle for the tenure, contracted tenure that we have from the customer. Right? That typically is like 7 years. Right? So that's how we have structured it today, but at least for the initial projects. And we are definitely having these, the larger discussions within, many of the, let's say, industry forums, as where government is also deeply involved, right? Both the MHI, all these officials, where we are impressing upon them, at least in the new FAME 3 that they are planning right now. Electric truck should be one of the vehicle because FAME 2 is silent on this specific segment. FAME 3 will definitely address that, and those are discussions that we have with the government as well. And we are also asking them to possibly bring it under priority sector lending or consider as an infrastructure under that category, so that the financing and the larger banks come forward to finance these assets. Hope that answers your question, Mr. Robin.
Yeah, fine, sir, fine.
Thank you.
Perfect. Mr. Kanu has few questions, so I would be muting Mr. Kanu. Mr. Kanu, you can mute yourself and you can ask your questions.
Hello. Yeah, I'm
Hello,
audible.
Mr. Prashant Kanu. Yes.
Yeah, hi, Raghvendra. Hi. Really interesting pitch and concept on this one. Few questions immediately on this. The example that you gave, Raghvendra, regarding the unit economics, not the unit economics, but you show that five trucks running across 45 trips and all. Can you open that slide?
Sure. Okay. Is it visible, Mr. Kanu?
Hello, I'm audible?
Hello. Yes, you are.
Yeah. Yeah. So, Raghvendra, I just wanted to ask, in total, how many trucks you own right now?
See, we are a pre-revenue company. What we have is the contracts from the customers, right? And
Okay.
which is where we are, raising the first round,
Mhm.
which will support us in terms of building this charging infrastructure. Because in heavy duty charging infrastructure itself is substantial investment, right? Each charging station costs like
Yeah.
anywhere from 40 to 45 lakhs. Yeah, right. In this example, we have the contract to deploy 5 trucks, and given the lead distance, we have to have at least 2 charging stations. There may be another project scenario where the lead distance is only like 50 kilometers, right? And where the distance is between the cement plant and thermal plant is only 50 kilometers. In that scenario, we may need to go with only 1 charging station instead of 2. So that's a bit dynamic for specific to that location. But to answer your question, yes, typically diesel trucks do 3 round trips every 2 days. That's roughly 1.5 round trip every day.
Yeah.
Right? That's roughly 360 kilometers of running per day. And these trucks do carry these are all fly ash bulkers. If you go with, let's say, 42 cubic meter or a 45 cubic meter kind of a volumetric bulker, they do carry anywhere from 40 to 43 tons of fly ash, right? So we are assuming 43. I mean, it can vary from 40 to 43. Right. Depending on that, we'd be delivering. We'd be doing 45 trips. Optimistically, anywhere from 40 to 45 trips every month.
Who is the custodian for the charging stations in between?
We.
Okay, so we own that cost, right?
Yes.
And how much is the percentage of that cost would be out of like this 38K revenue? Like what is the one-time cost setup and the recurring? So this is something I want to understand. Like, what is our cost coming into?
Yeah. Sure.
And before we shift to that, just a quick question on this part. The monthly revenue on this example is 38 lakhs, right? Approx.
Yeah. Yes.
Can plus minus 5-10% around.
Yes.
So what is your profit margin as of, like, if we go with this way, what is your profit on this part?
So if our revenue with the assumptions that we have made in terms of number of trips and number of tons, right? So our revenue would be 38 lakhs, whereas our the cost of operating, which includes the lease rentals, the charging, the cost, the electricity cost, the driver, the maintenance, the AMC cost, all put together would be around 28 to 29 lakhs.
Okay, so your gross margin possibly at this point of time will be almost 25-30%.
Yes.
Understood. Okay. Yeah, you wanted to show me that charging.
Yeah. So charging infrastructure, I don't have a specific slide. I'm sorry.
No problem.
But let me give you the numbers here, right?
Yeah.
So the each charging station, we today starting with 1 charger in 1 charging station, right? Let's assume that, right? It's a 180 kW charger, and the cost of the charger would be around 15 lakhs, right? And behind the charger, we have to have a substation transformer infrastructure as well, and as well as the licensing cost with the discount, and all those back-end infrastructure adds another 25 lakhs, right? So 40 and some, let's say, the civil works, the concrete platform, the platform for the charger. So all put together, it costs around 45 lakhs just for the charging station. But
one charging station,
on the day one, and tomorrow on this within the same cluster, if I'm adding another 5 vehicles and adding another charger in the same location, as you'll appreciate, I'll not be upgrading my the substation per se, because my initial substation will be sufficient to support 2-3 charging stations in the same location. What I will add is only that single charger, which will be around another 15 lakhs, right? That's how we go about in terms of building and scaling the charging infrastructure itself.
So technically your first time and the one-time charge that will be at the beginning will be almost 40-45K lakhs, and then after that it will be subsequent cost of 15 lakhs every time you add one charger on the same location, right?
On the
But
same location where we
the
don't have to
interesting part
upgrade our
is
substation transformer infrastructure. Yeah.
yes. But the substantial that is where the interest come into the play. But like this is one customer, right? This is one customer and one route.
Right.
Under one route you have like 45 lakh or say 60 lakhs of transaction that is happening for two charging points, right? On a single route. Okay. And then every time there is a route, unless until you have a committed revenue of like 2-3 years or 5 years contract with them, like this cost can go substantially, like on the liability side if the contract ends, or it even goes beyond, right? Because then you have to move whatsoever, you have to recalculate. So how you are going to take care of that?
See, this is where especially raw material procurement becomes very interesting. So I'm giving you the clusters. Typically the ones I have at least been personally to. I've been to 4-5 different clusters and 10 different plants sitting within these clusters, right? So typically, let's say every cement cluster may have around 10 to 15 cement manufacturing plants, right? And typically all of them source the raw material from the same power plant. The fly ash especially.
The fly ash, yes.
And given the ore is a bit concentrated, so majority of the logistics for all these cement companies happen on that same route.
Okay.
Or there may be certain cases like this cluster where it may be like another 1 or 2 additional routes, right? And each cement plant itself needs around just for this single raw material of fly ash, each cement plant needs 45 trucks every day. So around 250 trucks just every day carry raw material from the power plant to the all the cement plants in the cluster. So that way, asset utilization will definitely happen for these charging stations, and as well as the challenge would be going forward. Deploying 2-3 charging stations in single locations is relatively easy, but deploying, let's say, 5 to 10 chargers in a single location will be definitely harder because of the power availability, right?
Okay.
So that's where we may have to, depending on the the support from the DISCOM in that geography, we may have to decide whether it is beneficial for us. I mean, availability of land is not the constraint because land is definitely relatively easily available. This is outside the cities, right? Land is relatively easily available, but even if the land is available, we have to see whether DISCOM is in a position, or if the power line is in a position to supply let's say 3-4 megawatt of power, right? If not, we may have to go for a let's say another charging location 10 kilometers down the road. But it will still be on the same route. The route would not change.
Yeah, I agree. My question is in terms of the guarantees, that you own. So my point is, like, if you lose a guarantee in between, like your cycle is lost, or your committed commute cycle is lost, or every time you lose one cycle, you lose revenue, a lot of revenue, and subsequently that adds to your books. That is what I want to understand.
Yeah, so we will definitely study this for the next, once we deploy, we'll be definitely studying this, in the initial 1 to 2 months. And adding another charger is not the sizable cost because we already have a couple of, orders from the adjacent cement companies as well. So it will definitely make sense for us to add another charger in each of these locations for the redundancy purposes, right?
Okay.
I mean, obviously, at the end of the day, the charger cost is not our the substantial cost on a month-on-month basis. What impacts our revenue is obviously, as you said, the number of trips that we do.
Yes.
Right. We have to make sure charger availability is upwards of 99% at least, right? To make sure that my truck doesn't stop. Ultimately, it's a game of trucks running non-stop.
And what type of redundancy you are building up on these charges? Because what I'm saying is it can be a single point of success and single point of failure depending upon what type of resilience you have on this charging mechanism. Your
Yeah.
substation, you're charging, a single cable going fault, your equipment not working at the time of need of charger, it can just directly impact your trips. So
Yeah.
what is the resiliency that you are building?
So when we went ahead with identifying the location itself, right? There are multiple failure points here. Fortunately, I have a team member who comes from power infrastructure background, right? Mr. Santosh Kalyankar, who was with Reliance Industry, who built these charging structures for telecom towers, particularly, right? So when we went ahead and identified the locations itself, and there were at least 2 power lines availability, because that is one failure point, right? And out of those 2, we plan to source power from the line where the power availability is, because this is the power line that goes to the industry corridors, right, to the cement plant itself, and those have a 24/7 supply, compared to a line, let's say, that goes to residential locality, right?
Okay.
So that's one area. That's one point that we look at. The other point is the charger itself. What we have typically seen, even in the bus depots, right? The charger itself, the failure is, it comes typically from the rectifiers, and each charger may have 6 to 8 rectifiers. To make sure that charger doesn't function, we have to have a, let's say, ready supply of 1 or 2 spare rectifiers on site, on location.
Yes.
So that ensures that even if there is a malfunction, we can rectify with these rectifiers, right, within say 1 hour kind of a time. And we'll have electrical engineers on on the location, on ground. I mean, these are not highly skilled, even a typical, let's say, ITI, education background with, let's say, 3-4 years of experience is sufficient for these kind of roles. So that's how we go about having a full-time team at the charging station.
Okay. Raghvendra, that was my point of concern, because if something happens to your charging point, then definitely that stops your cycle, actually.
Exactly. Yeah.
Okay, good. As of now, that's it. And possibly if somebody is asking a question, like how I saw your projections. When you will be next infusing, because 4 crores is what you are raising, right? As of now,
4 CR is what we are raising. With 4 CR, we should be able to deploy first 15 trucks, and we already have, and these are 15 vehicles to, which are fully contracted, right? And we already have additional LOIs to deploy next, 40-50 trucks. So we, but before we go to the next round, we definitely want to build sufficient balance sheet, as well. So it should happen within the next 12 months.
Okay, got that. So you're driving it an asset light way without owning the trucks, or like how you're trying to do that?
That's something, my honest, let's say, cop-out answer would be to say that let's numbers guide. But honestly, this is a discussion I'm having with multiple finance, people, as well as our lead investors, as well as, even the financing institutions, right? So we have seen 2 models, even in the LCV passenger car, taxi segment, right? One is a pure asset-light model, and we've also seen, companies in the LCV segment specifically, where they've gone about with, asset-heavy model where they own the asset, right?
Yeah.
At the same time, today for us, it is, at the end of the day, it is a optimization that we'll have to do both in terms of scalability and profitability, right?
Exactly.
In these initial first, 4 to 5 years, we, ideally, it would make sense for us to focus on the scalability part, so that our subsequent financing becomes easier for the subsequent vehicle deployments. And once the once the scalability is in place, maybe 5 or 6 years down the line, that's when we may have to look at, the profitability part as well. But at the same time, unlike, let's say, a typical tech startup, right, a pure SaaS startup or something, we would not be, running deep losses, because that would not be a scalable model for us, right?
Yeah.
We definitely have to have at least a break even that we do every month-on-month basis, so that we are not running too much of a loss. Also, we don't want to be in a typical, let's say, e-commerce kind of a let's say sector where we run into deep losses as well, because that would not be scalable in these fleet operations.
In that case, I have two parallel questions around it. But I'm just considering other audience into the play also. Just questions into the play is when you're talking about losses and comparisons, like how you are doing good with your LNG versus petrol versus diesel versus electric cost and transit. What to say? Fees around it, and like that's the comparison everybody was interested into listening.
Right.
And just to comment on the previous part is like, so you want to say at the beginning you want to go asset light, and then possibly I will be thinking I'm invested into an organization in a company who is doing asset light one. That's why I had that question.
Sure. So your first question is primarily on the fuel comparison itself.
Yeah. So, like, why will you be the preferred one versus any other traditional partner?
Sure. The biggest advantage with EVs, which you already see in other, other, let's say, the other form factor vehicles, is the cost of running the truck. The fuel requirement is substantially lower compared to, let's say, the diesel cost that goes on running the diesel truck, right? Just to give the numbers, within the total cost of operation, the cost of diesel alone is anywhere from 45 to 50%, right? Whereas when it comes to EV, it is around 15 to 20%, right? On the other hand, let's ignore what has happened to the diesel prices over the last 1.5 to 2 years, right? Where it has relatively stayed constant, right?
Yeah.
But if you look at the last trend of any period over the last 10 years, diesel or the petrol price have that's even in the LNG have gone up anywhere from 12 to 15% increment every year, whereas the electric cost goes up by 4 to 5% year on year. Let's say the grid discount cost, right? The EV tariffs. So as as we move forward, EVs will definitely become more attractive than any other fuel.
Okay. Great.
And today it is already cheaper. It is already cheaper.
Yeah.
I mean, provided we do certain kilometers every month.
Sure. Thanks, Raghvendra. If there are anything else, I will try to contact you personally.
Happy to answer.
Yeah. Thank you.
Thanks,
Bhagwan.
Well, that was good. Great. We have few questions in the chat box, and also Mr. Ravle Patil is raising his hand. Okay, so we'll take two questions from the chat box, and then we'll go to the question with Mr. Ravle Patil. So there is a question from Mr. Sen Gupta. He's asking, within fleet management, are you looking 3-watt commercial EVs?
I'm sorry, could you repeat?
So it's within fleet management. Are you also looking 3-watt commercial EVs?
3-wheeler EVs.
Yeah, 3-wheeler. I believe that's 3-wheeler.
No, we are not. The simple reason being the chargers that we deploy are suitable for heavy duty. They're not suitable for smaller vehicles. Each charger is 180 kW.
Okay. Next question is from Mr. Amit Bajaj. He's asking how much time it take to full charge a truck.
1.5 hours. With 180 kW charger, it takes 1.5 hours to fully charge it. And in summer, it goes up to 2 hours.
Hope that answers your question, Mr. Sen Gupta and Mr. Bajaj. We have one more question from Mr. Samit M. He's asking, sorry, just 1 second. He's asking, what are the unavailability chances of electricity and any backup plan?
Yeah, so that's where getting power from which line becomes a key critical factor for us. And given these are industrial corridors, right? One advantage with the industrial clusters, not corridors, industrial clusters, is that there is definitely that industrial line where power availability is very high, right? And if we build the charging infrastructure where the power availability is definitely is good, the chances of not having the power availability is very low. But at the same time, if this becomes interesting when we look at outbound logistics where we have to go and build the charging infrastructure on a highway or within a town or a city, right, away from these industrial clusters. So there, yes, that is definitely a key factor that we have to factor in. And in those scenarios, it would make sense to have one or two extra charges as well, to ensure that whenever the power is available, we charge the vehicles as quickly as possible, as much as possible. Sorry, as many number of vehicles as possible, when the availability is high. But those are very, let's say, not the primary initial deployments where we would be going about. All the locations where we are actually deploying are in the industrial clusters itself, where the power availability is definitely very high.
Perfect.
Because
hope
if
that
the
answers
power availability, just to answer that,
Sorry.
since all these industries rely on the power availability itself, I mean, though they do have a captive power plant, I have been to at least one or two cement plants in each of these clusters where they don't have even their own captive power plant, right? They fully rely on the grid power, and they rely and the cement plant needs anywhere from 25 to 40 megawatt, right? If that power availability goes off, the entire cement plant itself goes off, right? So the power supply is definitely 24/7 on those lines.
Samitji, I hope that answers your question. So we'll move on to Mr. Ravle Patil. Ranjitji, you can unmute yourself and ask your question.
Yeah. It's good afternoon. So I'm audible?
Yes, you are.
Yeah. So Raghvendra ji, my first question is that you are showing the projection of by the 2027, the 100 vehicle deployment.
Right.
So the reason behind that, why this number is very, we can say the not optimistic. 100 vehicle deployment is not a big task. So why this number is very less?
The challenge is not on the demand nor the supply. The challenge is actually on the financing part, right? Given addressing to one of the previous question that one of the previous gentlemen asked. Today, these vehicles, heavy duty electric trucks, do not come under FAME scheme, right? And there is no let's say push from the government to this specific segment that is currently available to, let's say, other form factor vehicles like, let's say, buses or passenger cars, right? Given the nascent stage of the industry, at least for the next 1 to 2 years, the challenge would be on the financing itself. But once once we have our own balance sheet over the next 1 to 2 years, given we are in a B2B space, irrespective of there is support from the government or not, our balance sheet itself would be sufficient to get those additional vehicles finance from the year 3, year 4 onwards. So this is where we have given a very, very conservative projections. I would not want to provide very optimistic projections and not meet that, right? I would rather give a very realistic projections, because just to answer, just to go back to one of the previous gentleman's questions, none of the bankings are financing these heavy duty trucks, right? This is only let's say NBFCs which have a high risk appetite who are coming forward to finance these vehicles. Otherwise, they essentially have to rely on the balance sheet of the fleet operator to finance the vehicles, right? Given we are an early company, we don't have the balance sheet to do that. So I hope that answers your question. But in terms of demand as well as supply of vehicles, that is definitely there. Both the OEMs, have the manufacturing capacity to manufacture at least 200, 300 vehicles every month, right?
Yeah,
and the cement industry needs the vehicles. So demand is not the constraint, supply is not the constraint. Financing is the key problem.
Yeah, but this challenge, how we can feel that this challenge in next 4 to 5 years will be overcome, because it depends on the government policies. First of all, it is we can say the area of non-control. It is not in your hand or anybody's hand.
Right.
So,
As I
so
said, so
that
once given the biggest advantage of heavy duty trucking, let me go to that specific slide as well, where I have given a comparison of other EVs with heavy duty trucking. The biggest advantage is we are in a pure B2B play, and our customers are all AAA or a AA rated customers, right? But compared to all the other risks, the only risk that we have today is being a young company, we don't have the sufficient balance sheet to finance, where the financier is comfortable to finance, let's say 100 vehicles in the year 1 or year 2 itself, right? That is the biggest risk that we have. But once we have the balance sheet built for the next 2 years, given we are in a B2B space, right? Even if there is no let's say support from the government, if I have a project from these customers, AAA rated customers, the financing of these vehicles are actually not challenging. Because let me give you an example, right? I have had these discussions with some of the largest global asset managers again, where they look at each ticket size of not less than $50 million, right? But the challenge, and they want to invest in India in the EV space. But the challenge that they are facing is, one, they don't want to look at LCV because the volumes for the $50 million becomes very large, right? Two, they have looked at buses, EV buses, and they don't want to enter a segment where the end offtake is from a unfortunately from a government body, because that's the perception that they also have, that they don't want to look at a government contracted projects. So they're very keen to finance these B2B projects, but this is a nascent industry where this is still evolving. So the point is, yeah, once we have our own balance sheet in the next 2 years, year 3, year 4 is when it becomes very, very attractive for us to look at substantially larger fleet deployment. Talk about, let's say, 200 to 500 vehicles every year. But yes, but for the first 2 3 years, we have to build that balance sheet.
But Raghvendra ji, again, the question is that it is a highly capex-led model. Are you feel that because it's required the highest capex? Because I feel that 250 vehicle is also the very small number, because you can say the size of the market. And why I am talking about that, because I am living in the Nagpur. I went to this Chandrapur, and there is having the number of the factories, Ultratech cement factory, and I look at that factories. So
Yes,
we
sir.
can see the in particular geography, I see the near about to 400 to 500 vehicle are running in one factory area. So you
You're
are showing
absolutely
here
right.
so the market size is very big, and we are talking about the 100 vehicles. So as an investor, what is the value for me? Why I invest in this project? Because in 3 years, that is only 100 vehicles, and the market is very big. And again, the question is that your balance sheet is coming in the positive, then you are going with the banks and taking the finance. So I'm not getting the confidence that this model will be it's a big have the ability to scale the big.
Sure. So let me answer your question, sir. So you're definitely right. Thanks for bringing up the Chandrapur cluster. I've been to Chandrapur cluster 3 times. Right. So I fully understand the size of the cluster there as well as the demand for the fleet. And we have already evaluated the raw material procurement which these cement companies do, and I've already done the recce in that cluster. Right. As you rightly said, the demand is not the constraint, but the challenge is within. Let me also go back to as you within the cement clusters, cement company needs different form factor of vehicles. Today, we also have to factor the availability of the vehicle. Today, the availability of the vehicle is only 55 tonner, and there is a small 14/18 tonner, right? And these vehicles cannot go everywhere, cannot meet serve every purpose that cement industry needs, right? The 55 tonner can only do fly ash or a clinker, or the primarily, let's call it the raw material movement, and that too on a road, open road where you don't go through many towns, etc. Right? There are many operational issues that definitely come in that we have to factor. just last week, I was doing a recce in one of the southern Tamil Nadu clusters, where the customer wants to source coal, and they do almost 100 trucks every day, right? And this single customer, and that cluster has roughly 20 plants. This is as big as a Chandrapur cluster, but there is only one turning in a small town that these trucks pass through, where it becomes very, very narrow. And taking a turn in that cluster with this 55 tonner form factor vehicle becomes a challenge, right? These are all very minute factors that we actually have to focus on when we target the cluster, right? Though we see that that's where many of some of these clusters, instead of going with 55 tonner, they may be operating only 30 tonner vehicle. This is precisely the reason. And government also understands, right? And that's why they are building these, let's say bypass corridors around these, towns and townships and villages. So once that becomes available, some of these operational issues also get resolved. But today the reality is, we will not be able to address all these minute, challenges. That's why we'll not be able to, so there are many factors that go in to meet, but demand is high. The availability, the supply, the OEMs also have the capacity to manufacture, to meet these initial demands. At the same time, financing is obviously the challenge, the biggest challenge, and we have been spending almost like 1.5 years to address some of these financing challenges also. Yeah, this is a learning curve even for the financiers. Because even before they come forward the financing, they also want to see the data, how these trucks are performing. It's not like where we are in passenger cars, right?
Okay. Yeah. Again, my question is that because we have seen the we can say the change in the industry. It is the two-wheeler space. The electrifying vehicle is I can say the 4 to 5% has taken the place of the regular vehicles.
Right.
And we can say in the personal vehicle also the transition is going on. And
Right.
looking at the market trend in next 6 to 7 years, we can say the 80% vehicles are in this space are the we can say electric vehicle by the 2030.
Okay.
So what is your assessment that the particular industry you are planning to serve? What is the scenario in next 6 to 7 years? How much percentage of the electrifying vehicle are placed in this service?
Sure. So I will, the future projections is, we can be as optimistic as possible, but as we can be as realistic as possible. Let me give you the global perspective on what is happening, right? Especially in the heavy duty trucking, electric trucking. The biggest advantage, that is the biggest advantage with heavy duty trucking as well. Given this is a logistics segment where, ultimate factor that guides the, adoption is the cost benefit. And given globally, people are realizing substantial cost benefit on the trucking vis-a-vis, let's say, a passenger car, right? As you may have seen on the news, passenger car adoptions has reached certain, let's say, bottlenecks, right, globally. But whereas the trucking adoption has actually happened very, very well over the last 1 to 2 years. Just give an example. Europe has deployed total 15,000 trucks till date. Out of that, 10,000 trucks have gotten deployed just in the last 1 year. And China alone has deployed close to 1 lakh EV trucks in the just last 1 year. So given we are relatively at a nascent stage compared to these two geographies, once we have that learning over the next 2-3 years, the adoption will pick up very, very fast. But the challenge is not just about the adoption, but there are many other factors that come in, and which we have already seen in, let's say, bus segment, right? Power availability, the land availability, all these also things that we have to factor along with the financing. Even if financing becomes easier, where we deploy all that plays a role, which is where the discussions with the government is also today. Government is keen. I think they have already identified 30-40 corridors where majority of the logistic happens on Indian highways, right? Now government is thinking about building charging infrastructure, supporting charging infrastructure, and build a dedicated line for these charging stations where both the buses and trucks can co-leverage these chargers, right? So that's why this government is also keen to support these segments. But everything also has to plan when we look at 2030 kind of a scenario.
Yeah, Raghvendra, can you just tell me this business model, how much percentage dependency have on the government decisions? If the government are support, then this business model will be scale. And suppose we can say the government not able to take the decision next 5 years, then what is our business scenario?
Sir, to be honest with you, in the logistics space, I don't want to rely on government support. I would rather have a business model that purely works between two private entities, where the unit economics works out with, let's say a decent asset utilization. What I would rather focus on, how to ensure, how do I ensure my asset utilization is, optimal and high, so that I have the profit margin, so that I don't have to rely on government incentives at the end of the day. Right? Where I need government incentive is on the financing side, where if government gives me, considers the space, brings it under priority sector, it makes our opportunity much more viable. But even without that, even these first 15 vehicles have a decent profit margin to begin with, right? We are not relying on the government incentive as on today. And government incentive doesn't come, on its own. It also comes with certain, let's say, terms and conditions. Whether industry would be able to meet those terms and conditions, I don't know, right? We don't want to end up in a scenario which the two-wheeler industry unfortunately had to face, right? So given we are in a B2B space, not in a B2C space, B2C has its own, let's say, metrics where price and vanity features matter both. But in a B2B, it's pure price, right?
Okay. Good. So currently tell me what is your cap table, how much equity you are owning and other the co-founders.
I own 80%. The other two gentlemen, we three incorporate the company together, but the other two gentlemen bring in a lot of industrial experience for us, especially in the maritime ports. Yes, they share remaining 20%. As on today, we are three of us, and we are raising our first round.
Okay, this is the first round. Okay.
Yes.
And what is the exit strategy for us? Because we are invested in the first round, and so how we can get to the exit and what valuation you are anticipating?
Right. Given we have a very strong pipeline, our let's say just the balance sheet itself doesn't suffice for us to meet those pipeline, right? Because demand is huge. We definitely see multiple rounds happening over the next, we'll be going for another round within next 12 months, definitely sure, right? And there will be additional rounds that we'll be doing over the next, 2-3 years. So as and when we have a round, the initial investors do have an option from this initial days itself, right, to exit whenever they are comfortable, how much ever they are comfortable, whether partially or fully. Right, but at the same time, this is the industry that scales very fast, given it's a asset heavy and the revenues from each vehicle is also very high, right? Each truck is equivalent to 15 cars, right? So it scales very fast, both the balance sheet as well as the, let's say, our ARR and all the revenue multiples that come in this valuation part. So early investors definitely have a very attractive option to exit in the subsequent rounds.
So, are you planning to have the exit after the 1 year?
The initial investors have that. I mean, obviously,
yeah. Okay. And any valuation projection that you are supposed to disclose?
I mean, today, with just 15 vehicle order book, right? Not even deployment. As a pre-money company, we have a 30 CR valuation. And this is an industry where valuation and biz data team might be in a much better position than I am. But yes, they factor like 7 to 10x ARR as the as the metric. So it scales very fast, the valuation. So yeah, the early investors have very attractive option. Though there are obviously for all the good intentions, there are restrictions on the founders. Yes, we also want to bring build a very long-term business. We'd rather have an option for a early investor to exit if they want to. and we definitely are keen to build a very long-term business. Because just to give you, the contract that we sign are for 7 years, right? The contract that I'd signed after 1 year would be much longer than 7 years, at
Yeah.
least 10 years plus. So we are in for this long game.
Okay. Okay. Thanks. And the reason behind that you are allowing the person having the 5 lakhs of the investment in the cap table, any specific reason you are given the
They bring
cap
a lot
table
of network
entry?
connect. For example, Mr. Enarasu, he used to be ex-CEO for Adani Ports, right? Maritime ports is obviously one of the biggest segment that uses heavy duty trucking, and he also brings in all that market understanding, right? And we three incorporated the company together. It's not just that they're advisors and bring the network, right? So they bring in a lot of that additional value as a early promoter, co-founder, advisor as well.
Okay. Okay. Thank you. Thank you very much, and all the best.
Sure. Thank you.
That was quite
Any other
intensive.
question from the chat box?
Yes,
Akash?
yes. We do have quite some questions into the chat box. The next question is from let's see, just 1 second. Yeah, it's from Mr. Anand Shah. He's asking, what is the scenario in case any repairs are required for EV vehicle? Do you have any provision backup for the same?
Yes. So there are two, let's say, maintenance aspects. One mechanical, other electrical, right? Mechanical, the local ecosystem already has, decades of experience. There is already a, maintenance ecosystem available there. In terms of electrical, the biggest advantage with heavy duty truck or a bus is that, especially in LFP battery chemistry, may not be as much in the NMC chemistry. But in the LFP chemistry is that the maintenance issues in the initial 5 years are actually very, very less. And these are all liquid cooled as well, right? So the aspects of electrical issues coming up on the vehicle, on the battery are very low. And these are all, again, batteries from tier one suppliers in global tier one suppliers, right? So compared to, let's say, the incidents that we have seen on a two-wheeler or a passenger cars, the likelihood of incidents happening on a heavy-duty vehicle is actually very, very less. We have not, even in the buses, right? There are almost like 10,000 buses, EV buses running on Indian roads, and we hardly see any incidents of a fire or anything, accident happening on an EV bus, right? Because these are all liquid cooled, and being a liquid cooled, it comes with that inherent technical benefit, right? But even if that is there, we have an AMC contract with the OEM supplier, and they give us the warranty for 9 years, sorry, 10 years or 9 lakh kilometers, right? So we have that long-term AMC contract as well. So as and when any major untoward incidents happens, yeah, we take the support from the AMC.
I hope that answers your question, Mr. Shah. Next question is from Miss Todi. Okay, she is asking any running cost comparison with present fuels like LPG, CNG, and future technology like hydrogen, as
Yeah.
Reliance is coming big way on hydrogen
Yeah,
vehicle.
sure. So, being a chemical engineer and having supported a European fuel cell company, which, fuel cell which uses hydrogen as a raw material, as a fuel source, personally, I come with very deep knowledge on the hydrogen economy. And as I'm not sure who the question is, as the person rightly asked, hydrogen is definitely an attractive segment, but the globally, hydrogen is a very large ecosystem, and hydrogen plays into multiple areas. Where hydrogen is used as a raw material, those are the industries who are likely to adopt hydrogen, the green hydrogen, especially that Reliance or all these companies are building out with, not the transportation segment. Transportation segment, it will never be cost effective vis-a-vis EV. And there are multiple reasons I can get into, multi-hour long discussion because of my own personal experience in the hydrogen. right? I mean, I've used hydrogen right from my college days, so I have very deep knowledge on this segment. But yes, just to answer in a nutshell, hydrogen per se will never be able to compete with electric. But to compare to other fuels, right, diesel or LNG, just as we previously discussed, the cost, the rate at which the diesel escalates year on year is much more than the cost, the rate at which the electricity price escalates year on year, right? And look at, there are many portals where you can do the comparison of how these fuels have escalated over, let's say, 10 to 15 years. So you would see at least, I mean, depending on, which year, depending on what your starting and what your ending points are, you would see that it escalates roughly, 12 to 15% year on year. Right? Electricity, EB tariffs typically escalate 4 to 5 years. So even going forward, if it is already economical today, it will definitely become more attractive going forward. And that's the case with LNG as well.
Okay, I hope that answers the question, Purvi. Next question is from Mr. Uh, Anand Shahji. He's asking again, what is the lifespan of battery and EV heavy vehicles?
Sure. So the warranty itself is for 10 years or 9 lakh kilometers. But I'll give you a realistic example of what has happened in Indian context itself. One of the first EV buses that have gotten deployed in India was way back in 2016 by a company called Goldstone, Hyderabad-based company, which used BYD batteries. And this was a BYD technology that was available 2015-14 kind of time frame, right? The bus that got deployed in 2016 are still in running today on their first life, even after 8 or 9 years. So that's the real world. That may be only a few vehicles, right? But the point I want to make is given these are all liquid cooled and LFP batteries, they do last very, very long. And irrespective of the life, the warranty itself as a part of the AMC contract is there for 10 years. And even otherwise, let's say the state of the state of health of the battery goes down below, let's say 75%. As a part of the AMC contract, the OEM says they will replace the battery at their own cost.
Okay.
And that is there, signed in as a part of the AMC contract.
Yeah. So I hope that answers your question, Anandji. The next question is from Mr. Taral Bhole. He's asking, the contract is for 5 years to 8 years. As per my knowledge, the battery life is around 3 to 5 years. What's your plan after that? Does the cost will hit company or NBFC?
No, as just going back to the previous question, the life of the battery is much longer than what we've seen in the two-wheelers or passenger cars, because these are all liquid cooled. These are not air cooled, and that matters a lot for the life of the battery. Just alluding to the previous example, these batteries do last very long. We have seen the real experience in our own country of lasting more than 8 years in the first life itself. So even otherwise, if it doesn't last, AMC contract is already there. If the battery asset doesn't last as a part of the AMC contract, the risk is on the OEM, the truck manufacturer, not us. So hope that answers the question.
Perfect. Taralji, I hope that answers your question. So we'll move on to the next question. We have few more questions left. Guys, in the meantime, if you have any other questions, you can raise your hand or you can pin in the chat box. We'll take it up, So the next question is from Mr. Bajaj. He's asking, what is the price of charging a truck?
Price of charging a truck. That depends on state to state. Each state has its own EV tariff policy. But on the other way to look at it is, each kilometer needs around 2 to 2.5 units of electricity. And if it's 6 rupees or 8 rupees, yeah, multiply that by 2 or 2.5. That would be the cost of charging per kilometer.
Okay. The next question is from Mr. Prashant Kanu. He's asking, any regional and political factor you're covering into your decision, local truck unions and others?
Yes. So this is the yes, local ecosystem substantially plays a role as well. And fortunately, our initial projects are the ones where we have a good network, within the local ecosystem as well, right? But even otherwise, today the cement manufacturing itself is growing, 8 to 10% CAGR year on year, because of the boom in infrastructure and housing segment. So all our initial vehicle deployment are actually going towards new capacity requirements, and we are not replacing the any diesel truck today on road, right? So that way, right from the get-go, we are not competing with any local ecosystem. But I'll give you a very pleasant experience as well, right? When we wanted to do a trial in in our first project itself, the trailer actually came from the local transporter, and we didn't the local transporter didn't actually charge anything also. There is actually local support as well from the local transporter ecosystem, and the charging stations that we are building are actually on the land premises of the local transport. So I hope that answers your question. Though yes, if we want to deploy, let's say 50 or 100 trucks in that cluster in a single go, there will be a lot of pushback from the local ecosystem. But our objective is not that. Our objective is to scale gradually, organically, and then also later on get these local transporters on board, convince them that EVs work. And that's where our second, business model kicks in. And if they bring their own EV trucks, they can co-leverage our charging infrastructure, pay us and on the energy part itself, right? So that we have a complementary equation, not a competing equation itself. Yeah.
Okay, perfect. So we have another question from Mr. Anand Shah. He's asking, insurance cost cover in case of any accident,
Yes.
especially in case of EV.
Yes. So we'll be going for insurance coverage, comprehensive insurance coverage, and those ecosystems are already available from even the large insurance partners. So as I said, right, so there have been at least 120 truck deployments in India, and all of them are insured as well. So that ecosystem is already available, and we have the costing already figured out. In terms of insurance for the goods itself, it depends on the kind of freight that we carry. If it is a low value freight, like let's say of fly ash, it doesn't make sense to go for insurance for that. But if it's a freight like a cement bag, yes, we'll be definitely going for that for insurance for those logistics.
Okay, does any extreme climate conditions affect just 1 second? Conditions affect the operations of charging station, in turn affecting the turnaround time and expenses.
Yes and no, because we have had a real world experience here. We did do trials when there was a cyclone, right, in the western coast. The last year we had a cyclone in Gujarat. Our OEM partners and we did a trial during those extreme scenarios, right? So even during those cyclone conditions, we did have a downtime, where the power availability was not there, right? So we couldn't charge it, and but both the cement manufacturing plant as well as the local let's say power network became available within the next 1 day, because this was powered by the local captive power plant, right? So it depends on the again goes back to the power availability questions, but per se the charging infrastructure itself doesn't get impacted as such because of these extreme weather events, right? But the key thing that we lose during these extreme weather events is the power availability.
Okay. The next question is from Purvi ji. She's asking, can we feed our overweight as in case of other vehicles? Is EV capable of the same?
Can we feed overweight?
Overload. I mean overloading. I think.
Overload. See, overload norms are all very regional, right? That is purely on the logistic part. how the logistic ecosystem functions in terms of that is very region specific. Each region does certain overloading. It could be 1 or 2 tons in some geographies. It could be as high as 5 or 10 tons in certain segments. So those are all regional parts, and it doesn't matter whether it's EV or a diesel truck, right? If the question is on on the weight of the vehicle itself because of the battery, there is definitely a compromise that we make, of roughly a ton because of the battery, or purely on the payload carrying capacity on these trucks. But yes, that is not, that definitely plays into our cost metrics, everything. Right? Even after that, we do see, when we are carrying 40 tons of payload, 1 ton here and there, has its own equivalent impact in terms of percentage on the revenue. It's 1 ton versus 40 ton payload carrying, right? 2.5%.
Okay, next question is from Mr. Amit Bajaj. He's asking, what is the exit policy?
Exit policy.
Yeah.
As we have previously discussed, so we will be definitely going through multiple fundraisers. So the initial investors do have an option. There is a ROFO in place, right of first offer, as well for the investors. If they want to further participate, there is an opportunity as well. If they want to partially or fully exit, it is up to the investor in the subsequent rounds. And given the nature of the industry, there will be multiple rounds that we will be looking at over the next 3 years. And our next fundraise will definitely happen within the next 12 months.
Okay, perfect. So Purvi is asking again, is there return load available generally for revenue increase?
That depends on the segment, and we have seen both scenarios, right? We have seen a scenario like just a fly ash movement from power plant to the cement. Right? There only one way it is loaded, but there are relatively few opportunities where the logistic happens between the cement plant and iron and steel plant, right? There we do get a return load as well. So it depends on the segment. But at the same time, the biggest cost component here is the prime mover. Given that the trailer can be detached, so as we scale, depending on the return logistics, we can also, because we also have to factor, how we load the freight on the vehicle, and there is, the local ecosystem takes its own, has its own metrics on how they load and unload the freight as well, right? So there are multiple factors that we factor in, but there are very few cases where we can get a return load.
Okay, perfect. Next question is from Mr. Prashant Kanu again. He's asking,
But
are you
again,
covered?
sorry, just to complete, if my customer is giving a return load, it is, they also, negotiate along the same lines, right? I don't get substantial benefit, but yes, there is incremental benefit.
Perfect. So Prashant is asking, are you covered for insurance on wear and tear, sabotages, hard hit impacts for both truck and charging station?
Are you covered for insurance on wear and tear is covered? Sabotage, we are looking, it's just like any other vehicle. We have to factor those insurance coverages, and then we will definitely ensure there is a dash cam available on the vehicle to capture where the, let's say, untoward incidents like sabotage has occurred. Yes, so that we have a clear, understanding of to recover the insurance costs, right? So yes, it is just like any other vehicle. We have to factor all those. But on the other hand, charge infrastructure, yes, we will have a security team in place. And apart from the security team, there will also be the electrical engineering team who will be there 24/7.
Okay. I hope that answers the question, Mr. Kanu. Next question is from Mr. Ravle Patil. He's asking, how much equity you diluted in this round?
As we have previously discussed, the pre-money valuation is 30 CR, and we are raising 4 CR now. So
Okay.
yeah, it is about 15%, roughly.
Okay. The next question is from Mr. Jaskaran Singh Ji. He's asking what CAGR you are expecting in coming years.
So it fully depends on how attractive the financing gets, because as we have previously discussed, the demand nor the supply are the constraints here, right? We will let me go to the revenue sheet itself. In the projection sheet, we will multiply over the next years very rapidly, at least 2x, 3x year on year. But once we have a decent balance sheet size, we'll definitely scale fast. At the same time, we have to also see how the local existing transport ecosystem also starts adopting the EV trucks, where they will start using our charge infrastructure that we these clusters where we have our deployments, right? So we have to see how that plays out. But for the next 3 years, 4 years, yeah, we are looking at 2 to 3x of revenue multiplication year on year.
So Prashant Ji is asking what are the worst case scenarios for you in terms of revenue incurring?
Worst case scenarios. Okay. The biggest, let's say the most sensitive aspect for us is the asset utilization itself, right? How many trips will we do every month, right? So that's where cluster becomes very, very important for us, and having that cluster manager who is from that geography, from that location, who has a prior experience on the diesel transportation, right, becomes very, very critical for us, right? That is what will ensure high asset utilization for us. On the other hand, operationally, even the drivers are a critical component of how many trips we will do. At least for the initial, because the volumes of deployment are also not substantially high. Each truck, we're only deploying 15 trucks today. We do have that truck availability, for these, initial, but driver availability. Driver is a challenge, whether it's diesel or electric. One metric that industry uses is that for every 100 trucks, there are about 80 to 90 drivers who are available, right? So that's where we have to make things attractive for drivers as well, so that they come on board. And that is the biggest advantage with EVs as well, since driving is very, very easy compared to driving a diesel truck. We foresee that drivers also will, that is the experience as well. Once drivers become comfortable with the EV, they typically don't want to go back to diesel truck driving. So that ensures, they do stay longer. So these are the two key challenging aspects that we see in terms of operations, and that's the biggest aspects that impact our asset utilization and then our revenues and the bottom line.
I hope that answers your question, Mr. Kanu. The next question is from Mr. Jaskaran Singh Ji again. He's asking, what is the main threat we can expect from our business? From our business model form as well as clusters that you're. What is the main threat that we can expect from our business in comparison to our competitors?
Sure. One, this entire industry is very, very nascent, right? There are only 100 to 120 trucks that are running on Indian roads today. So that way it is very, very nascent. And just to answer one of the other questions which are also there, in terms of the competitors, there are very, very few, as of now, there's only one, existing fleet operator, who comes from the traditional diesel fleet operation, who's actually, gone ahead and deployed 5 or 10 EV trucks, right? Apart from that, just like what we have seen in, passenger cars or LCV, typically the current fleet operators are not the early adopters of EVs, right? That's what we've seen in any other form factor of vehicle, even the larger ones like buses, right? So in terms of competition, yes, we do have one or two competitors. One who happens to be existing transport operator themselves, and two, even some of the large CPOs like Charge Zone have also started a sister company who will start looking at fleet operations on segments where they have already built out the charging infrastructure, right? So that helps them co-leverage their existing transport, the existing charger ecosystem, places like highways, right? So that's and those are chargers which are of typically a certain capacity that can serve a medium-sized vehicle, may not be suitable for 55-tonner vehicle. So ecosystem will grow accordingly.
I have thought answers your question, Mr. Singh. The next question is on the similar lines. Again, I think it's partly answered. It's from Anand Shaji. He's asking any competitors as of now in the business model, and the second part is in the business model form as well as clusters that you're targeting, or do you have the first mover advantage?
In the clusters that we are targeting, in the southern clusters and western clusters, given I am based in Bangalore, we are focusing on south and west, given the comfort we have with these, regions and geography. We are one of the first, we are not one of the first, we are the first movers, and these are all greenfield projects, right? So as of now, we do not have any, strong competition from pure electric vehicle deployment. But yes, they will definitely come forward over the next, 1 to 2 years. And given the size of the market, right, we are talking about 2,000, 3,000 trucks that operate in each of these clusters. So there is definitely opportunity for more than one player.
Okay. The next question is from Mr. Amit Bajajji. He's asking, what is the currently working hours of trucks are running day-night shift?
What is the currently working hours of truck running day night? See, typically, cement industries run entire 3 shifts. There may be certain lean periods they operate only 2 shifts, right? But the way cement industry procures, it depends on it's very specific to each freight. So if it is a fly ash, they have 1 or 2 silos, and they keep consuming fly ash from that silo and then refill those silos accordingly. If it is like a, let's say, like a pet coke or a gypsum kind of material where they just go dump in the yard, there it happens 24/7. So it depends on freight to freight. So that's one key factor that we look at in that obviously ends up playing in terms of the asset reflective part. That's how we look at it. I'm not sure if that answers your question.
Amitji, if that answers your question, please let us know. Or if any.
So it depends on the freight itself.
Okay, we'll move on to the next question in the meantime. It's from Anandji. He's asking, you just said about Charge on setting up charging stations. Is there any possibility of having strategic tie-ups to cut down on the capital expenditure?
No. I didn't say that Charge Zone is setting up in these clusters. I said Charge Zone is looking at deploying trucks, medium duty trucks in the zones where they've already deployed, they already have a charging infrastructure, right? Charge Zone being the largest, I think they are the largest, charging point operator. They have built a decent, charging network on some of the highway corridors, right? And these are charging networks that are meant for cars, right? And those charges can power a medium duty like a 14-tonner, 18-tonner, but may not be suitable for, let's say, 55-ton, right? I mean, because that eats into the charging time, right? So in the zones that we are deploying, there is no charging infrastructure availability. We have to build our own charging infrastructure, and based on number of vehicles that we deploy, we build our charging infrastructure accordingly, so that we have a very high asset utilization on the charging infrastructure, and we don't want to enter into a scenario where like in a scenario what we are seeing on in the case of passenger cars, right? Sometimes there is a huge queue even to charge a car, right? We want to have a full control on that charging infrastructure, so that we schedule our charging times properly and we don't lose the wait time during the charging part.
I hope that answers your question, Anandji. Okay, this has been a very extensive session. We have been going on for nearly 1 hour and 40 minutes now. Uh, I don't see any other questions, guys. We can take only last one or two more questions. If you have any other questions, please go ahead and pin in the chat box, or raise your hands. Otherwise, we would be going ahead and closing the session now. I just want to communicate in the meantime that since it's a 4 crore round, which has been going on for MOOEV, out of which, you know 3.5 crore has already been closed. Okay, BizData has a 1 crore mandate, out of which 50 lakhs has already been closed. We have only another 50 lakhs left, in order to close this round, which will be done in next couple of days. Today we are rolling out an intent form to all our investors present in this meeting. Okay, if you're interested to invest in MOOEV, and contribute to the heavy duty trucking, you can fill the intent form today, and we can get on a call tomorrow, and we can close this up. Okay, our IR teams will be in touch with all of you guys to answer if any other questions which you have, or any doubts if you which needs to be resolved. Okay, with that said, I don't see any other questions into the chat box, so we would be officially going ahead and closing out this session. Okay, round details can be has already been shared with everyone. You can review that, or if you have any other doubts, you can get in touch with your respective investor relations managers. That would be Abhinav, Naveen, or Bhargav. Okay, you can reach out to me as well on WhatsApp or on email. Okay. Thank you so much, guys. Thank you for joining in.
Yeah, thank you, ladies and gentlemen, for all the questions, and we definitely would love to work with you. And I'm certain that some of you might come from the same industrial verticals as well. So there is a lot of opportunity for us to possibly explore opportunities to work together and then build value both with MOOEV as well as possibly brings in a lot of other opportunities as well for you. So would love to connect with you further, and then thank you, BizData team as well. Thank you, Akash, for coordinating, organizing this session.
Thank you, guys. Thank you so much
Thank
for
you.
joining in on Sunday afternoon. I wish you guys a very happy weekend, and let's connect tomorrow. Thank you so much.
Thank you. Thank you, everyone.